Welcome back to the Deep Dive. Today we're plunging into something of a paradox, really, that's quietly shaping the financial world.
Oh, yeah. What's that?
Well, on one hand, you've got the U.S. stock market just booming. I mean, we're talking a massive $52 trillion market cap back in Q1 2025.
Huge numbers.
Exactly. And more retail investors are jumping in than ever before, right? From about 58% in 2020 up to 62% in 2023. Sounds like everyone's making a fortune.
You'd think so, wouldn't you? But not quite. Despite all that activity, all that growth, the stark reality is over 90% of investors consistently underperform the market.
It's this massive disconnect.
It really is. It challenges everything we think we know about investing, you know?
That's the core challenge, isn't it? So digging into why does this keep happening? Our sources point to a few persistent culprits.
Like what?
Poor timing, obviously. The struggle with just, information overload and all these conflicting signals coming at you.
Information asymmetry, too.
Absolutely. Then there's the sheer uncertainty of picking the right stocks. And let's be honest, our own human biases, emotions, cognitive limits.
It's almost like everyone gets the same map, but 90% still manage to get lost.
Yeah. Maybe it's not the map. Maybe it's trying to read it at 100 miles an hour while juggling flaming chainsaws, metaphorically speaking.
Yeah. It truly highlights the limits of human decision-making, especially now with markets being so complex, so data-rich.
The sheer volume, the velocity of information, it can just overwhelm anyone, even seasoned pros. Leads to missed opportunities, or worse, costly mistakes.
Exactly.
Okay, let's unpack this then. Our mission today is to dive deep into a really innovative framework designed specifically to tackle this problem head-on. It's called alpha intelligence.
Alpha intelligence, okay.
Think of it as a next-generation approach. It marries human insight with something genuinely groundbreaking. Symbiotic quant intelligence.
Symbiotic,
So-
working together.
Precisely. The promise.
Yeah.
Smarter, more explainable, and significantly higher performing trading decisions.
So it's not just throwing more AI at the problem. It sounds like a fundamental rethink of how human expertise and advanced machine capabilities can actually collaborate.
You got it. It's not replacement. It's true augmentation.
Interesting.
So for our journey today, we're going to explore Alpha Intelligence's unique dual engine system. That's really the heart of its power.
Dual engine. Okay.
Yeah. We'll see how this system adapts to wildly different market conditions. You got some fascinating case studies.
Real world stuff.
Absolutely. And then we'll look at where this tech is set to make a real impact. Think hedge funds, pension funds, the big players.
And importantly, how it's different from other AI tools people might have heard of.
Crucially, yes. Because Alpha Intelligence, from what we're seeing, it genuinely seems to occupy a league of its own.
All right, let's get into it. This symbiotic quant intelligence. What's the edge?
So we touched on the core problem. Data flood, conflicting signals, our own cognitive limits. What's striking is that many tech trends push AI, sure, but they often sideline the potential of actual human insight, deep domain expertise.
Right, the human element gets forgotten sometimes in the rush for automation.
Exactly. Alpha Intelligence explicitly chooses a different path.
And what's fascinating there, according to our sources, is that it's not trying to replace human intelligence. The goal is to significantly augment it.
How so?
Well, it aims to evolve algorithmic intelligence by creating this symbiotic relationship with domain-specific data, deepening human insights, and kind of catalyzing discovery through this unique partnership.
Okay, so that's where the symbiotic quant intelligence approach comes in. Human plus AI symbiosis. How does that actually work in practice?
Well, first, you have the quant intelligence core. It uses logical, quantitative reasoning, structured, unstructured data. But here's the key. It's enriched with domain expertise.
So not just number crunching. It's like intelligent, informed number crunching, guided by real market experience.
Precisely. Then you layer on symbiotic learning. This is where human-guided feature engineering comes into play.
Feature engineering, for those maybe less familiar.
Yeah, think of it like experts showing the AI what specific patterns or signals to look for in the data. Could be financial ratios, sentiment indicators, even geopolitical news triggers.
Gotcha. So the human points the way.
Right. And then the machine learning optimizes how to best use those insights for trading. It's a continuous loop learning, adapting based on human direction and its own performance.
And all that feeds into this algorithmic discovery engine.
Exactly. It leverages that expert input, fuels the symbiotic loop, trains on carefully curated data, and this is vital, engages in continuous learning.
So the outcome isn't just more analysis. It's about generating smarter, more explainable, and higher performing decisions. It's like giving analysts financial superpowers, not replacing them.
And that leads us right to the core of how it operates, that unique dual engine system you mentioned. It's not just one AI, it's a sophisticated two-pronged approach.
Okay, tell me about engine number one.
The first is called O. Think of it as the algorithmic logic engine. It's the logical formulation core, rules-based, deterministic.
Like a master chess player with pre-programmed winning strategies for specific defined situations.
That's a great analogy. It analyzes and responds based on established, robust rules. Very logical.
Okay, so Bori is the strategist. What's the second engine?
That's the machine learning adaptive engine. This one learns from I's rules, but then it adds machine learning flexibility.
Ah, so it adapts.
Constantly. It adjusts to real-time market volatility, live conditions. So if Nor A is the master strategist, Nor is like the nimble tactician on the ground, making real-time adjustments as the battle, unfolds.
And the synergy between them. That's the magic.
It seems to be. This dual-layer approach combined with something important fundamental growth selection.
Meaning they start by looking for fundamentally healthy companies.
Exactly. Stocks with strong underlying health and potential. That combination allows alpha intelligence to dynamically adapt strategies for alpha momentum.
Alpha meaning beating the market, getting those extra returns.
Right. But doing it with intelligent risk mitigation, it's not just chasing returns, it's managing the downside.
Okay, here's where it gets really interesting for me. The framework sounds great in theory, but the real proof is how it performs in different market conditions, right?
Yeah.
What did the sources show about how this holds up in the wild?
Yeah, this is compelling. Our sources provided 3 distinct case studies that really paint a picture of this adaptability. We've got ISSC, a volatile growth stock, DAVE, one with sustained trending growth, and SBUX, navigating a declining bearish market.
3 very different scenarios.
Totally. And they show how the system seems to generate alpha pretty much regardless of the market's mood.
Okay, let's take them one by one. First up, case study 1, ISSE. You said volatile growth stock.
Yeah, sharp, unpredictable price swings, a real test for any system.
So baseline. Buy and hold, ISSC.
You'd have done okay. A respectable plus 91.92% ROI. Not bad at all.
But Alpha Intelligence, how did DBA, the rules-based engine, do?
Incredible jump. Plus 470.78% ROI.
Wow. Okay. And O'Day, the adaptive one.
This is where it gets wild. In those highly volatile conditions, East generated an astounding plus 676.64% ROI.
Yeah.
And the key insight isn't just that it outperformed down, it's how. In chaotic markets, a system that continuously learned and reoptimizes based on real-time shifts. Well, it fundamentally redefines risk management.
It turns danger into opportunity.
Kind of, yeah. It avoids those steep drawdowns, those painful drops like one on August 13, 2025 in the study. By avoiding the big hits, it compounds returns much more effectively when others are getting whipsawed.
That's seriously impressive. Okay, let's pivot. Case study 2, DAVE. Completely different situation, sustained trending growth.
Right. Clear, strong upward momentum identified through those fundamental growth filters first.
And buy and hold here. Must have been good.
Very good.
Yeah.
Depending on the exact period, between plus 382.88% and plus 472.67%. A great ride if you just held on.
So did Alpha Intelligence add value even then? What did DVC do?
eMoose, the adaptive engine, still delivered fantastic results.
Yeah.
Plus 902.47% ROI.
Still doubling the buy and hold, roughly.
Yeah. But here's the fascinating twist. In this scenario, the deterministic, rules-based engine actually outperformed.
Really? How much?
An incredible plus 12.32% ROI.
Wow. So the logical engine beat the adaptive one in a clear trend.
Exactly. It demonstrates that when clear, strong trends exist, that deterministic intelligence can be more effective at amplifying structured breakout strategies. It captures those big momentum gains really efficiently. It leverages the clarity when it's there.
Talk about capturing momentum. Okay, one more scenario. Case study 3, SBUX. This wasn't growth. Declining market, bearish.
Yep, a tough environment, prices generally heading down. For most investors, this spells losses.
He did it. What was buy and hold for SBUX?
A loss, and it's 12.8%. You lost money just holding it.
Ouch. Okay, the moment of truth for Alpha Intelligence. How did it handle the downturn?
This is maybe the most powerful demonstration. While buy and hold lost money, both Ayer and Wien not only preserved capital, but turned a negative environment into significant positive gains.
Both of them. How much?
Endai delivered plus 78.59%. Ede delivered plus 77.71%. Very similar performance between the two engines in this case.
So even when the overall trend was down, They found ways to profit.
Yes. It shows their ability to apply intelligent momentum strategies, maybe capturing short bursts of profit, sidestepping the big declines. It proves alpha intelligence can generate alpha even when the fundamentals are pointing down. It's about finding value and protecting assets, even in a storm.
Wow. Okay, so if we pull back and look at all three, ISSE, DAVE, SBUX,
Yeah.
volatile, trending, declining, the framework shows true adaptability across all regimes.
That's the takeaway. It's regime agnostic. It protects and compounds in volatility. RDAC captures big gains in clear trends and both safeguard capital and find positive alpha even in downturns.
It's not just a fair weather friend.
Exactly right. This isn't just about impressive ROIs on paper. It potentially shifts the whole investment paradigm. You move beyond trying to predict the market cycle to having a system that can thrive regardless.
A truly regime-agnostic advantage that could redefine portfolio stability, consistent outperformance across bull, bear, sideways markets.
That seems to be the potential, yes.
So what does this all mean for, the listener and the broader financial world? This isn't just cool tech theory. It sounds like it's built for the real-world, high-stakes environments, especially now with AI becoming such a big topic everywhere.
Absolutely. This technology directly addresses that critical need for advanced tools. The investment landscape is grappling with, frankly, unprecedented unpredictability.
Yeah.
And there's that constant challenge, generating consistent alpha. This seems like a potential solution tailor-made for the modern financial system.
Okay, let's talk specific users. Who needs this? First up, accredited investors.
Yeah, individuals seeking, strategic alpha modeling. They need more than just traditional advice to navigate these choppy waters.
Makes sense. Then, the big players, hedge funds. They manage, over $5.3 trillion collectively.
Huge amount. And they are relentlessly pursuing reliable alpha generation, consistent outperformance, robust risk mitigation, protecting against downturns, and data-driven insights to optimize portfolios.
Alpha intelligence sounds like it ticks all those boxes.
So it appears designed precisely for those needs to help them stay ahead.
And beyond hedge funds, you mentioned pension funds.
Yeah, think about the bedrock of the financial system, pension funds. Globally, they manage a staggering $58.5 trillion, plus wealth management firms' long-term asset allocators.
Just in the U.S., the numbers are wild. 304 state pension funds, over 4,600 local systems, more than 715,000 401k plans.
Exactly. These entities face immense pressure. They need to ensure financial security for millions. They desperately need intelligent risk mitigation, dynamic asset allocation, ways to catch momentum even when markets are volatile.
That scale is mind-boggling. Global assets under management heading towards $145 trillion.
Yeah.
How is this platform actually built to handle that kind of scale and complexity where other systems might struggle?
Well, it's designed as a modular platform architecture. That's key. It's built to ingest vast amounts of high-quality, curated data, not just any data.
Quality in, quality out.
Right. Then it discovers and analyzes patterns for predictive insights. It includes robust feature engineering modules, market indicators, adaptive algorithm intelligence, powerful model training engines. It's designed as a complete ecosystem.
And it doesn't stop there. You mentioned future phases.
Yeah, the vision extends to things like live trading capabilities, algorithm simulations, sandboxes, places where users could test their own ideas safely, and maybe even an algorithm marketplace down the line.
So a comprehensive system for continuous innovation.
Yeah.
How do people actually access it? What's the business model?
It's described as a hybrid software as a service SaaS model, but with performance sharing.
Okay, so multiple ways in.
Yeah, things like API call usage, subscription tiers offering different levels of access maybe to data, strategy builders, sandbox testing, even live execution, plus, importantly, white-labeled solutions.
Meaning it could be integrated seamlessly into existing wealth management tools that advisors already use.
Exactly. It makes adoption easier. And the performance sharing aspect, it aligns the platform's success directly with the success of its users. It's a strong value proposition.
Okay, this brings up a really critical question then. With all the buzz around AI, how is alpha intelligence truly different from everything else out there? LLM-based approaches, traditional trading bots. Is this just another algorithm in a very crowded market?
It seems not. Based on the comparative analysis in our sources, alpha intelligence has several unique characteristics that set it apart. Many current solutions, generic robo-advisors, standard trading bots, they often lack critical features that alpha intelligence seems to have integrated right into its core.
Okay, like what? What are the big differentiators?
Well, number one, and maybe the biggest, the human in the symbiotic loop. This isn't passive automation. It's actively augmenting human insight.
Right, that collaboration piece we talked about.
Right.
Most robo-advisors or bots don't really have that dynamic human element integrated, do they?
Not in the same way. It leads to potentially deeper, more trustworthy insights because the human expertise is guiding and refining it.
What else?
Robust ML orchestration models. Think of this like a sophisticated air traffic controller for all the machine learning parts, making sure they work together seamlessly, efficiently.
That level of management and deployment, it's often limited or just not there in simpler solutions.
Correct. It allows for more complex, coordinated strategies. Then there's something crucial for user trust. Explainable quant intelligence.
Explainability. The black box problem with a lot of AI.
Exactly. Alpha intelligence is designed to provide transparency, allowing users to understand the logic behind the decisions. That's huge. You can see why a trade was recommended or executed. That's often missing elsewhere.
Okay. Human in the loop, ML orchestration, explainability. What else stands out?
A modular data signal marketplace seems to be part of the design. This offers flexibility, access to diverse data sources that users could potentially integrate into tailored strategies. That's not something you typically see.
And efficiency. How quickly can it adapt?
That points to the AI test plus deploy in one loop. It seems to have a seamless, iterative process for rapidly testing and deploying new algorithms or adjustments.
So faster refinement, quicker adaptation to changing markets.
That's the idea. Much faster and more effective than systems where testing and deployment are separate, clunkier processes.
And finally, underlying all of this,
Is the unique algorithmic discovery dual engines, that do and new architecture we discussed. That capability, that dual approach, simply isn't found in typical robo-advisors or trading bots.
and that's what enables that regime-agnostic performance we saw in the case studies.
Precisely. It's the foundation for its adaptability.
So the power really is in this symbiosis, deepening human insights, catalyzing discovery, creating smarter, explainable, high-performance decisions. It directly addresses the limits of purely automated systems by marrying the best of human expertise with machine capabilities, and importantly, building trust through that transparency.
Well summarized.
Okay, so we've seen alpha intelligence adapt and outperform across all sorts of market conditions. We understand its unique human-AI symbiosis. It's clear we're looking at something more than just, another algorithm.
Definitely feels that way.
We journeyed from that paradox, booming markets, yet widespread underperformance, to this potential solution. Alpha intelligence. We saw how its dual engines, DI and ONE, don't just aim to outperform, but to adapt, bringing perhaps unparalleled precision to major financial players.
And we unpacked how that human-in-the-loop symbiosis really sets it apart from other AI tools out there.
It really seems evident that alpha intelligence isn't just an incremental improvement. It feels more like a foundational shift in how financial decisions could be made.
Yeah, it directly tackles those core issues: underperformance, risk mitigation, in what's undeniably a complex and unpredictable financial landscape these days.
Indeed. So here's a final provocative thought for you, our listeners, to consider. In an era where information overload and market unpredictability are just the new normal, alpha intelligence promises a way to tackle underperformance and risk. What if the most powerful investment platform isn't just about pure AI, but about this truly intelligent partnership, human expertise, and machine capabilities working together?
Unlocking that adaptability, that precision.
Exactly. Unlocking unparalleled adaptability, precision, maybe even sustainable market dominance. What possibilities does that open up for how you approach understanding and engaging with financial markets, knowing that this kind of symbiotic edge might exist?
Something to definitely think about. Thank you for joining us on this deep dive.
We'll see you next time.